Let's turn our attention now to the local front. Mining and manufacturing data out yesterday and creating some hope that we are starting to see a bottom on the economic front. Are you convinced?
I am convinced. In fact, my little lead indicator, the Moy River Index, which is a measure of all the big trucks through the N3 Plaza, which is sent to me by the guys who actually look at that toll gate, is starting to suggest the same thing. We're starting to see a bottoming out. So, you know, the numbers at face value, if you'd just flown in from the Amazon jungle and you'd been there for 12 months, you'd just have a look at it and you'd say, wow, you know, these are bad numbers. But it is showing signs that we are starting to bottom out, and I guess in the months coming ahead, economists will start to say to themselves, when are we going to see a positive print? Probably not until towards the end of the year. And I guess what we've got on our side to help is Christmas, where people will be feeling a hell of a lot better than they were last Christmas, where we were close to the end of the credit world.
Well, the question is, will they have enough money to spend during this Christmas? Manufacturing production contracting by 13.7% in July from a contraction of 17.2% in June. So a big improvement there. But we've also got to consider now that the rand is strengthening and this could further hamper manufacturing sector. Are you worried about what we could see going forward?
Yeah, you must remember a lot of the manufacturing sector is closely tied into mining, traditionally being the services to the mining. So if you're starting to see the mines picking up slowly in terms of, you know, we've seen decent enough noises out of people like Kumba Iron or people like Exaro suggesting that production is going to slowly be ramped up. So I guess I wouldn't get too anxious in the short term, but obviously the rand does hamper their ability to be able to be to be in that space and competing against the much cheaper imports. Tito Mboweni did suggest 2 days ago that he was worried about it. It was an interview done on Reuters, done with Reuters, and he was worried about the firmer rand. But to be perfectly honest, it's a weaker dollar. The dollar's at levels that we haven't seen for a whole year. So it doesn't matter whether you're in Europe or whether you're in South Africa, you're experiencing pretty much the same dynamics. And again, in Japan, as you saw, the market's down because their currency is too strong. So I'm not too sure where it leaves everyone wondering about a different reserve currency for the rest of the world, because if we're going to do away with the dollar, doesn't that mean the dollar's going to get weaker over time?
We also had China releasing those new bond renminbis, if I'm not mistaken. Could you give us some insight into that, and do you think that will be a further negative for the dollar?
Yeah, initially in the office we had to scratch our heads and say, well, these are the guys with all the reserves. Why do they want to be issuing? Bonds? But I think it's obviously part of testing the waters in a longer dated program. I think, if I'm not mistaken, the 28th of September is the day that they'll actually be open for the auction. And as you saw in New York last night, markets are still receptive to US bond issuances. So notwithstanding the fact that government debt is growing quite sharply and it's worrying a lot of people about inflation down the line, I think what you might see is to be interested to know who the participants are here. You know, are they the traditional ones outside of the Chinese buying these treasuries? Will you see Asian participants, or will you see, again, it all depends on what the yield is, because if the yield is good, you'll always get people chasing it.
We also had mining data out yesterday. Mining output increased 4.8%, but gold production still down a hefty 7.6%. No surprise there.
You must remember the gold mining industry, in terms, if you compare it to its peers in South Africa, is quite mature. You know, Johannesburg was founded on gold mining in 1886. You know, so we're talking about an area that's been mined for the better part of 120 years. Some of those mines are exceptionally deep, so they're going to struggle. Obviously, the deeper you go, the longer it takes to get the ore out, the less the quality of the ore. So in gold mining, I've never been, or at least for the last decade or so, comfortable about the fact that you can invest in these companies over a longer period. Whereas some of the other industries in South Africa in the mining space, specifically platinum, is not as old as the gold mining industry. So look, in short, it's nice to see the mining sector pick up, and I think it ties in nicely to perhaps seeing manufacturing pick up, because they supply the mining industry. So I don't know. I guess on balance, as you mentioned, it's pleasing to see, but not out of kilter with regards to gold output.